Today, Bitcoin touches the $103,000 level as the cryptocurrency continues its climb. Former Celsius CEO Alex Mashinsky is sentenced to 12 years in prison, and Katrina Paglia of Pantera discusses what's next after the Senate's stablecoin legislation failed to advance to a full vote. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies are closing out the week in the green, a day after Bitcoin crossed $100,000 for the first time since February. Now, by noon Eastern, that cryptocurrency traded at $102,900, but at one point crossed above $103,000. Ether, meanwhile, jumped 12% to $2,300, and Solana climbed 6.5% to $170. Ether was a major winner for the week as well, rising nearly 25% in the past 7 days. Bitcoin climbed 6%, while the S&P was on pace to close the week just slightly lower. Okay, let's talk about the top stories. Shares of Coinbase heading lower today after the company reported first quarter earnings that fell short of Wall Street's expectations. The company reported $2.03 billion in revenue, up from $1.64 billion a year ago, but not the $2.12 billion Wall Street had been anticipating. Coinbase also reported a 17% drop in trading volume compared to the fourth quarter, when crypto prices surged after President Trump's election victory. Coinbase's earnings came just hours after the company announced the largest crypto M&A deal on record, buying crypto derivatives firm Deribit for nearly $3 billion. At around midday, the stock had slipped about 2.5%. Next, Alex Mashinsky, the former CEO behind the collapsed crypto firm Celsius, was sentenced to 12 years in prison. Prosecutors accused Mashinsky of misleading investors about the safety of Celsius's yield-generating platform, while he secretly sold off tens of millions of dollars in his own personal holdings. Celsius filed for bankruptcy in July of 2022, just as the crypto meltdown reached a fever pitch. And a year later, Mashinsky was arrested alongside another key executive and charged by federal prosecutors who alleged fraud and securities manipulation. Those charges came just as Celsius entered a $4.7 billion settlement with the FTC. Then in December of last year, Mashinsky pleaded guilty to commodities fraud and a scheme to manipulate the Celsius token. As for the company, it emerged from bankruptcy in January of 2024 and began repaying $3 billion to creditors. It also created a Bitcoin mining business dubbed Ionic Digital. Finally, the Senate's stablecoin legislation has failed to advance to the Senate floor. The Genius Act needed 60 votes to make it to a floor vote, but only captured 48 votes in favor. 49 senators voted against the measure's advancement, while 3 senators didn't vote at all. Now, the setback comes after 9 Democrats, including 4 who actually voted for the Genius Act in committee, said over the weekend that they would no longer support the bill in its current form. The statement put out by Arizona Democratic Senator Ruben Gallego called out numerous issues with the bill, including AML and national security concerns. Now, those same Democrats said they were eager to work with their colleagues to address those issues. Treasury Secretary Scott Bessent, who pushed for Congress to pass crypto legislation while testifying before the House Financial Services Committee this week, posted on X saying the Senate missed an opportunity to provide leadership on digital assets. All right, for our main story, I spoke with Katrina Paglia, Chief Legal Officer at Pantera, about this setback for the Genius Act and whether stablecoin bills are a priority for Congress. So I want to start by getting your reaction to the Genius Act's failure to advance in the Senate. This isn't the only stablecoin bill moving through Congress, but how much of a setback is this for seeing crypto legislation passed?
Sure. So initial reaction was a little disappointed. The stablecoin legislation is generally perceived to be the legislation that's going to be the easiest to get through. That being said, I wasn't the most surprised because in the days leading up to the vote yesterday, there was definitely chatter and discord on the Democratic side with respect to some perceived conflicts around stablecoin legislation and the presidency. So not unexpected, but I am optimistic that it will be reintroduced with a few modifications, hopefully, and we'll still see this pass in the near term.
Now, the Democrats who opposed this bill raised concerns around national security and anti-money laundering. Is that an actual concern that needs to be addressed in this bill? And if so, how should that be tackled?
Yeah, I think it's fair to say that we need to make sure that we have the right security and framework around things around AML for consumer protection reasons. I think that the two sides are not too far off with getting there on this. And the language was actually introduced kind of late in the game. And I think kind of perception, or at least some of the things that I've been seeing today, is that the Democrats really just wanted more time to digest the text and make sure that it did address their concerns there.
Now, are people talking behind the scenes that this pushback really has to do more so with President Trump's crypto dealings? I mean, just this week, we saw key Democrats speak out about the Trump meme token and other crypto projects emerging from the administration.
Yeah, I don't think it's any surprise that there's a pushback and there's political controversy. I mean, this is DC. This happens with every piece of legislation, right? So, yes, there's definitely chatter about the conflict with the president's stablecoin and meme coin. But again, this isn't like unusual in DC, and I suspect that there's just political play happening in the background, and it will get sorted out. And again, like very optimistic that we're going to see this legislation pass.
To that point, what does the industry do at this stage? How do they work with Congress to move the Genius Act forward, or even other bills that are at play at the moment?
Since January 20th, we've seen this continued collaboration between Congress and the regulators and the crypto industry, which is really positive. I think we're going to continue to see that momentum. Just continue to have an open dialogue, everybody being respectful and understanding that the end goal is really just to properly regulate this industry for the U.S. consumers' protection. I think we're all fighting from the same direction for the same goal. And again, I feel like the parties are having civil conversations, and we'll kind of get there with the compromise on the language.
So frankly, the crypto industry spent a lot of money trying to elect pro-crypto candidates and move the needle on crypto issues. It was controversial in the 2024 election cycle, but has it paid off from your perspective?
Yeah, I think the political donations and the lobbying has been pretty meaningful, and we've seen positive impact. We've seen very pro-crypto appointments in this administration. We've seen significant outreach from the regulators asking for the industry's input. I think that we continue to see actually the PACs receiving money for the interim elections as well. It was very clear that crypto was a single voter issue for the majority of millions of Americans, and that played out in terms of what the vote ended up being. And the administration has, thankfully followed through with their commitment to supporting the industry.
Would you say that the stablecoin bill is still the low-hanging fruit in Congress, or do we look ahead to other priorities like market structure?
Stablecoin is definitely the low-hanging fruit. We have two bills out there. One received significant bipartisan support, and this one also was pretty close, and we're hopeful that we'll get there in the coming weeks. Market structure, more complicated, more moving parts. The new language just came out this week, actually, so we have a little bit of time before I think we're going to see market structure move forward, but the hope is by the end of the year for that one as well.
Shifting gears from legislation over to deal action, a lot of new acquisitions announced in the last 6 months, and especially in this calendar year since we saw the turnover at the White House. Anything you want to say on that front, what you're excited about?
I think we're opening up just from a general macro perspective in the capital markets. I think we're going to see more IPOs, which from Pantera's perspective is super exciting. A large amount of our venture investments are several years old, and we're looking to kind of see the IPOs coming out. Circle being a really big one. They filed their S1 recently. We're really excited about that one in the portfolio. And just, generally more broadly speaking, to your point, things are happening. I mean, everybody saw the Coinbase huge, massive announcement yesterday, which I believe is allegedly the largest crypto transaction ever. So it was like $2 or $3 billion, I think. So the things are happening. Things are opening up. It's really exciting for us to see, hopefully, some of our investments start to IPO and exit them.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.